It always starts quietly. A swipe here, a small loan there. You tell yourself, it's fine. You'll pay it off next month. But then life happens. The car breaks down, your insurance spikes, or your favorite brand drops a new sale that's too good to miss. And suddenly, that harmless little credit card balance becomes a shadow that follows you everywhere. Most Americans don't realize this, but debt isn't just a personal mistake. It's a system designed to keep you in motion but never free. The average American now carries over $7,000 in credit card debt, and the number keeps rising. You might think that's just bad budgeting. It's not. It's the result of an industry that has turned lending into psychology. Every ad, every special offer, every shiny credit limit increase is engineered to trigger the same reward circuits in your brain that gambling does. Banks have mastered the art of making you feel wealthy even when you're broke. They call it financial freedom, but what they really mean is freedom to borrow. You see, debt has become the new normal, almost a cultural badge. We congratulate ourselves for having good credit, when all it really means is we've learned to stay in debt responsibly. It's genius, in a dark way, an invisible leash you willingly wear. People don't fear debt anymore because it hides in plain sight. It doesn't look like a predator. It looks like a convenience. Your phone pays your bills, your bank app flashes rewards, and your lifestyle feels earned. But underneath the screen glow lies a slow suffocation, one interest charge at a time. Before we talk about how to pay it off, we have to talk about what it really is. Debt is not just money you owe, it's time you've already sold. It's a piece of your future that's already been traded away for comfort today. And the only way out is to face that truth head on. The hardest part about debt isn't paying it off. It's looking it in the eye. Most people don't even know exactly how much they owe. They just know it's a lot. So they push it to the back of their minds, the way you ignore a strange sound coming from your car because you're afraid of what the mechanic will say. But ignorance is not protection. It's delay. And delay is expensive. The first step to freedom is brutal honesty. Pull every number out of hiding. Credit cards, student loans, car payments, that $200 you borrowed from a friend 3 years ago. Write it all down. When you see the total, it might feel like a punch in the gut. That's okay. That shock is fuel. Now add 2 more details that most people skip. The interest rate, the silent killer, and the minimum payment. Those 2 numbers are the real enemy. They tell you who's quietly stealing your money each month while you're busy surviving. Let's take an example. Ethan, a 29-year-old designer, finally sits down and adds everything up. 2 credit cards, 1 student loan, and a car payment. On paper, it doesn't seem catastrophic. But when he sees that 1 card charges 27% interest, reality hits. He's not working for himself anymore. He's working for the bank. Once you have the numbers, you need a plan of attack. There are 2 that actually work. The Snowball method. Start with your smallest debt first, crush it fast, and enjoy the momentum. It's emotional, not mathematical. But that's the point. Humans need small wins to stay alive in long battles. The Avalanche method. Target the highest interest rate first. Save the most money long term. It's logical, efficient, and perfect for the disciplined. Which one should you choose? Honestly, it doesn't matter. What matters is commitment. Pick one and stay with it. Because freedom doesn't come from the method. It comes from the moment you stop pretending your debt is under control and start treating it like a war you intend to win. Paying off debt isn't about being strong. It's about being smart. Most people try to fight their debt with willpower, cutting every small pleasure, skipping dinners, swearing off coffee. It lasts for a week, maybe 2. Then they burn out and swipe the card again. That's because Willpower is a terrible financial plan. Systems are better. Automation is discipline without the stress. The first move is to make every minimum payment automatic, so you never get hit with late fees or penalties. Then, set a second automatic transfer, your attack payment, aimed straight at your top priority debt. Time it to leave your account right after payday, before you even see the money. If you never see it, you'll never miss it. Over time, your balance will start to melt quietly in the background while you live your life. Ethan did this. He set up his payments to trigger every Friday after his direct deposit cleared. 2 months later, he noticed something strange. His anxiety dropped. He wasn't constantly thinking about bills because the system was working for him. But automation isn't the only lever. You also need to free up cash without turning into a hermit. Start by hunting the obvious waste. Subscriptions you forgot about, insurance policies that quietly increased in cost, convenience fees from delivery apps. A 5-minute phone call to your credit card company can save you hundreds if you ask for a lower interest rate. I've been a loyal customer for years, and I'm preparing to pay off my balance aggressively. Can you match the lower rates I'm being offered elsewhere? It doesn't always work, but when it does, the savings are real. When you start treating debt like a system instead of a monster, something shifts. You stop feeling trapped. You realize that debt doesn't care how guilty you feel. It only reacts to math and action. Once your payments are automated and your spending streamlined, your finances begin to breathe again. You finally see what freedom feels like, not in theory, but in numbers that move in the right direction each month. Once the machine is in motion, the next step is to flip the rules, to turn the system that trapped you into one that sets you free. This begins with a mindset shift. Paying off debt isn't punishment, it's power. It's the act of reclaiming your future, one transaction at a time. When Ethan automated his payments and cut his spending leaks, he didn't stop there. He asked a different question. What if I could make more instead of just spending less? That's where real acceleration happens. Start small. The gig economy isn't glamorous, but it's a bridge. Drive for a rideshare on weekends? Design logos online? Walk dogs? Sell the junk sitting in your closet? Every dollar earned outside your main job is a hammer striking at your debt wall. The key is direction. You don't earn more to spend more. You earn to finish the fight faster. Even an extra $200 a month can shave years off your debt timeline. But consistency can get dull and boredom kills progress. That's why you need to gamify the process. Treat each payment like a level cleared. Watch your balance shrink and celebrate the milestones. Create a simple spreadsheet or tracker app and color it like a game board. The goal isn't to make debt fun. It's to make progress visible. Human motivation thrives on proof. When you can see your wins, you keep going. Ethan did weekly check-ins. Sunday evenings, 5 minutes, no excuses. He'd open his tracker, mark another small victory, and sometimes reward himself with a cheap but meaningful treat, a long walk, a favorite meal, a quiet night off. These rituals turned his debt payoff into a rhythm instead of a burden. That rhythm is what creates momentum, and momentum is what separates dreamers from finishers. Because once you turn paying debt into a system you enjoy maintaining, you're no longer running from it. You're running past it. Getting out of debt is a victory. Staying out is mastery. Too many people make that final payment, breathe for the first time in years, and then fall right back into the same habits that buried them in the first place. It's not about money anymore. It's about memory. The system you built to escape debt must now become the foundation of how you live. Freedom isn't automatic. It has to be maintained. The first rule is to protect your cash flow. Credit cards aren't evil, but they're seductive. If plastic is your weakness, switch to cash for a while. The envelope method sounds old-fashioned, but it works because it's physical. You divide your money into categories: groceries, dining, fun. And when an envelope runs dry, you stop spending. It teaches discipline the way training wheels teach balance. After a few months, you'll notice you no longer need the envelopes because you've internalized the limits. The second rule is simple but absolute. Never carry a balance. If you can't pay your credit card in full each month, stop using it immediately. That's not negotiable. No reward points or cashback perks are worth trading 27% interest. People love to say they're optimizing their points, but what they're really doing is subsidizing the banks. The only thing worth optimizing is your peace of mind. Finally, build a safety net. Debt often returns not because people are careless, but because life is unpredictable. A medical bill, a broken car, a layoff. These are not crises, they're inevitabilities. An emergency fund turns them from disasters into inconveniences. Start small, $50 a month, $100 if you can. Watch it grow to $1,000, then to 3 months of expenses. Keep it in a separate, high-yield savings account and make the transfer automatic. Once again, system beats stress. Ethan did all of this. A year after he began, he wasn't just debt-free, he was calm. The calls had stopped, but more importantly, the fear had too. He didn't measure success by how much he earned, but by how much he owned of himself. That's the real endgame. Because freedom isn't about never owing anyone money again. It's about never owing yourself an apology for the way you live.